Whenever you see me, whenever you speak to me, you will never know that I'm going through something. You will never know that I'm sucking maybe internally because my outside energy will always be shining. It'll always be positive. It'll always be up. I hope that that life comes for everybody because I'm really excited to see this digital transformation. I just want to see it happen. I'm gonna be really mad if I don't. Like if I am on my deathbed and then this shit hasn't hit the fan yet, I'm gonna be real pissed. Anyways, all right, let's get into why we all came for at least what I said in the chat. We were talking about GJ Mina Emiliano. That's how this whole freaking conversation started, and we were just talking about the expectation that the markets have going into the Bank of Japan monetary policy announcement and rate decision. Um, and how the market was expecting, and when I say the market, I mean the vast majority of manual retail investors. You could see it all over social media if you were paying attention in that space. You could see it in the CYPRX community where we were sharing some updated articles. Again, they weren't our articles. We were just sharing them so that way we can gather the market perspective. Because we, on the Zoom call, if you guys don't remember, we actually adapted very well, right? And I'll explain that to you. And I tried to explain that to you guys a little bit in the previous call. But without information on the screen, just rapping to you guys off the dome, I want to explain how mentally I was able to do so. So if you don't know what I'm talking about, you guys remember just a couple of days ago on Monday, Asia session, well, Asia session here, Tuesday, Asia session in Tokyo. Um, the Bank of Japan monetary policy announcement came out, and they came out with a rate hike, but the sentiment from Governor Ueda was still dovish, why that took place and why that actually weighed on the Japanese yen. And we saw the opposite of everybody was thinking, which was, oh, Bank of Japan is going to hike rates, yen's going to gather strength, and we're going to see GJ sell off, right? That's what everybody was thinking. I know you guys were seeing it. I even put a fundamental analysis out that gave you guys those two um, scenarios where I said scenario number one would be a dovish sentiment from Bank of Japan, no interest rate hike at all, and they keep rates in negative territory. That was my scenario number one. My scenario number two was they hike rates, they come out with a hawkish tone, and yen gains strength. Right? I wasn't thinking of the curveball, but when the curveball happened, because I know fundamentals, I was able to react. So when I saw them hike rates, I remember being on the call with you guys. I said, hey, they hiked rates, but hold on, price is not dropping yet, right? So what did I do? I went in, I looked at all the notifications, I looked at what the Governor Ueda was saying, and he was talking about buying Japanese government bonds. He literally said that right now, although we did hike rates pretty much in a nutshell without being too fundamentally based, just going to put it from my perspective, he pretty much said, yeah, we're hiking rates, but we're still accommodating monetary policy. We're still stimulating the economy. The economy still needs help, right? We're not too confident that inflation is going to stay above 2%, although we did hike rates. We still have to prop up the economy. They're still stimulating the economy, quantitatively easing it, buying up Japanese government bonds, right? So knowing the effect that that has on money supply, right? I know that when they're pumping money into the economy, that boosts up the supply, that pumps supply of the money into the market, right? Right. Whereas vice versa, okay, when they hike rates, what is that supposed to do? It's supposed to tighten financial conditions. It's supposed to suck money out of the economy, right? See, that's what the Federal Reserve has been doing over the past consecutive couple of since 2021, 2022, right? They were sucking liquidity out of the market. Okay. So think about it. So this is how I process the information. Okay. Bank of Japan is hiking rates. The market, based off of retail sentiment, is thinking sell because of a rate hike. But what is the bank what are they actually doing? They're still buying up Japanese government bonds. They're still stimulating the economy. And I know that again, remember the PDFs that I gave you guys. So what did I tell you guys before I got off the Zoom? If we hold above the 190.200, we're gonna see buys. We're gonna see GJ strength, right? And then boom. So seeing the narrative play out where the market was pricing in, the market was expecting Bank of Japan rate hikes, Japanese yen strength, and then them throw a freaking curveball. So they threw the market off by saying, yeah, the media was thinking, if you go look back, I'm telling you right now, go fact check me. Go look at all the media articles on that day, just 2 days ago. And all of them say headline, Bank of Japan hikes rates. Headline, Bank of Japan hikes rates. Headline, Bank of Japan ends monetary policy easing for the first time in 17 years. What is this causing? Euphoria amongst retail traders who think and have been thinking, oh, Bank of Japan rate hike, sell, right? Wrong. Because yes, that's what they were projecting out, i.e., these evil central bankers to the mainstream media, the media that again controls the minds of the population and manipulates them into thinking one thing, but then the central bankers and the people that actually control the monetary policy behind the scenes were doing another freaking flip-flop boom curveball right there. It's super easy to see. Now, I know that in the moment, you have all these emotions because price is fluctuating, there's money on the line, there's decisions to be made. But if you take a deep breath, you guys saw how calm I was, how we were on that Zoom call. I wasn't freaking out. Oh my God, it's going to do this. Oh my God, it's going to do that. I just gave you guys a simple analysis. I noticed, I said, hey, look, it's not going down. Give me a second. I paused the screen. I read through some fundamentals. And right before I hopped off, I literally said to you guys, if it doesn't break the 190.200 major, buy that. Boom, we turn around today. We look at where GJ is freaking 200 pips to the upside. Bada boom, bada bing. It's not. So again, why I lectured you guys previous to all this about higher intellectual ability to think smarter than other people. Remember, we're trading up against these algorithms that don't care about us. Not one single bit. I'm not important. You're not important. None of us are important. Hedge funds, family offices that operate with less than $2-3 billion are unimportant. This is the freaking forex market, $6 trillion a day. Okay. And so if you can't and you don't have the intellectual capability to handle what I just said over a prolonged period of time, remember your commitment to this space, this learning process, understanding this, because this has been 9 years for me. This is no hocus pocus joke. 4 years ago, I was not able to talk like this. I was not able to break down fundamentals like this, but I wanted to. That's the difference. I wanted to. So I started committing time and effort to reading these things, painfully going through all of the freaking articles. What do I say to you guys to save yourselves from the mistake that I made? I literally tell you guys, don't pay attention to the fluff. Usually the information is in the first two paragraphs of the article or the last. So then all you have to do is take that to skim through information, go boom, read through the first paragraph, second paragraph. You don't find anything important, go to the last paragraph, the second to last paragraph, read it, don't find anything important, move on. Because you see how these fundamentals are 20,000 freaking pages. All the in between is them talking about RSI and MAC DMA and EMA crossover and blah, 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 blah. That get to the meat, get to the vocabulary, get to the things that matter. And when you do, then you can start to pick apart that information and plug it into your own trading strategy and how you internalize these things, understanding supply and demand. That's very important. If you don't understand what I said about them increasing money supply, right? Go back and just familiarize yourself with the little tiny screenshots that I put out to you guys. And if your brain doesn't understand it the first time, read it 3 or 4 times, give yourself a week or two, then read it again another 3 or 4 times and see how it applies to the fundamentals that come out the following week. Because the fundamentals come out the same every single month. Every single month, you're going to get CPI, PPI, core PCE, freaking FOMC, like it's never different fundamentals. It's just the tones. It's whether it's going to become more hawkish, more dovish, tight monetary policy, loose monetary policy, and understanding what that does for the currency. Okay. That's the secret. If you can understand what type of tone reacts certain currencies in specific ways, that's really the juice. All that other, like, oh, I got to understand gross domestic product, all these percentages and this and that, don't think about that. Just understand if the numbers come out positive, what's the most likely scenario? If the numbers come out negative, what's the most likely scenario? And then if there's a curveball when the news comes out, like we saw the other day, when there isn't one-sided volatility, remember, we were projecting one-sided volatility. Again, to revert back to my original analysis, I gave you an analysis. Scenario number 1, hawkish sentiment from Bank of Japan, interest rate hikes, yen strength. Scenario number 2 was dovish Bank of Japan, no rate hikes, rates in negative territory still, weakness in the yen, strength in GBP JPY. We didn't get either of those scenarios. So having that ability to create curveball scenarios in your head by understanding these metrics. Oh, okay, they hiked rates, but when they hike rates, that usually means they tighten monetary supply, sucking it out of the economy. But what are they really doing behind the scenes? They're still stimulating the economy. They're still buying up Japanese government bonds. They're still pumping stimulus into the market. So what does that mean? It means the economy still needs help. Then on top of that, UATA solidified that by saying, again, if you don't know how to finish my sentence, he said that we still have to take a more accommodative approach. Boom. That's how I did it. I'm no magician. That's just how I did it. So anyways, I thought that I'd wrap off the dome just to show you guys, flow, no charts, no nothing, just blank. You guys are the things I see on my screen right now, you know? So it's I understand it's a process. I guess let me finish my video here. I understand that it can be um, a lot at times. I've been there. It almost makes me want to cry. The freaking slums that I've been in trading. And they're not over yet. It's not like when you become profitable, you don't stop losing. You don't like you still take losses. They just hurt a lot less and you know how to deal with them a lot better, you know? Don't ever be the type of person that thinks that you're going to be some magic carpet rider who doesn't lose trades and like social media has a tendency to do that because people are flashing their Lamborghinis on social media and this and that. It's really sickening. Anyways, so I hope that that little wrap helped. I hope that that gave you guys a little firmer perspective of what took place the other day from a non-fundamental, like just I know that sometimes the breakdowns that we do on Zoom, they get boring because I read a lot of information to you guys, but if I'm being completely honest, it's part of the process. So anybody that thinks it's boring, welcome to the club. Forex ain't really that cool, until you make a freaking $100,000 trade and everybody else around you is still driving to work, you know.
Yeah, 1,000%, bro. And you
I
killed it
think,
though.
yeah, I think the biggest trade that I ever made was that trade that I made when we were in Mexico. And then the biggest loss I ever took was that $54,000 trade where Spencer was at my house in that $54,000 in one trade, a yearly salary in one trade that hurt really bad.
Oh,
I got drunk and I was floating in the river like this. I
I
got cocky
remember
though.
that day too.
The market humbled me. I went through a lot in trading. I got scammed when I was a beginner. I've over leveraged. I've blown
Oh, you were
accounts.
going crazy on the leverage, bro.
You remember that era of my life? It was really interesting. I made like that year. It was pretty cool. It's pretty cool, you know.
But like
But
you said, you got humbled real quick.
it was very dangerous when I lost. Yeah, and I'm really happy that I lost that money at the end of the year. I think it was in like October, November, if I remember correctly, because I feel like that like ended my year for me, and I was like, all right, stop doing what you're doing. You made some money this year, tone it back, approach next year different. You took risk this year. Like you gotta that's that's another thing as an investor. You like at any point in time that I was taking those risks, I was willing to lose that money. Like at the end of the day, I'm talking about how it hurt, but I was very well aware of what I was doing. I was attempting to try and grow a portfolio fast. I had mastered a strategy. I had 110% confidence in my strategy, you know. But I was trying to accelerate my growth, not only because I had a community, but also because I had individuals at the time count on me to really show them that I could trade my ass off. And so I did that. You remember Emiliano, I was making call outs like it was nothing every single day on GJ, giving my trades full swing. That shit was stressful. You guys don't understand how much stress it is to sit down and give people your analysis and then think that they're going to count on that. It's very stressful, So you
You were
want
doing
to,
it live too. So
yeah,
in the mornings.
I was doing it live almost every single day. It was crazy. Um, I don't have it in me now because of the my family situation. I have my girls in the afternoon full time. So really, I only have about 4 to 5 hours in the morning now to get stuff done that I need to get done, which has also been a very stressful part of my trading journey. But this is something that myself and Justin were talking about on the Zoom call the other day, and I'll end it here. Is you really have to have the ability to adapt to any situation. Like when life throws a curveball at you, since we're talking about curveballs, and we talked about what the Bank of Japan did, how they made the market via the media think one thing and then they did the opposite. Well, it's just like that in life. If you want to be successful at trading, excuse me, you have to figure out a balance. So if something tragic happens to you in your personal life, you have to figure out how to still incorporate if you love trading like I do. I love trading. I don't just trade to make money. Like I actually love it. It's a process in my brain that suits me. I could never imagine after having not worked now for almost 5 years, going back to a job where I got to do what somebody else wants to do. It just doesn't make sense for me. That's not how we, in my personal opinion, as humans are supposed to live our lives. So like trading for me gives me that opportunity, you know? And so I love it. It's like, it's not just a job. I don't wake up and I'm like, oh, I got to make money. No, I love it. So it lets me learn it more because I actually care about the information. It's not just a avenue of approach for me to siphon money. So what me and Justin, what him and I were talking about, thank you, Camille, I appreciate that, was being adaptable. So Justin was just explaining to me how he took a hit when he got the manager's position and he started getting very overwhelmed trying to um, balance trading and then also managing a car dealership. And he became, I guess, some high-end manager there. And he was just explaining to me how he was having a very hard time balancing trading and not feeling stressful because of the new position that he got, because he didn't want to let people down in his real job and his real life, but then also not let his family down and himself down in trading. So that was causing him stress. And I was just relating to him by saying, in my personal life, just recently, I experienced a very big rug pull. I lost over $1,000 in trading capital, which is a freaking big hit. My funded FX got pulled. And then the prop firm that I was trading on, my funded trader sent a message after trading with them for almost, I don't know, 6 or 7 months now. Um, Messaged us and said that they're not accepting US traders anymore, and then switching over platforms to DX trade and da 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 da. I'm not about to sit there and go and learn a new freaking platform because prop firm industry was acting a fool, you know. I still have the CYPRX strategy and I can still trade leverage crypto and I have been. So I've given forex a very interesting break and it's been very healthy. Um, the reason why I'm sharing this with you guys is because this is all information that I don't really have time to share. Like if I sat here and I typed everything out, I'd have to write another book. Holy shit. But being adaptable, that was the thing I was trying to get at. So it's not like I'm going to sit here and quit. It's not like just because I experience some change in my life, I'm going to go and just let that bring me down or change my mentality towards trading. You just have to adapt. So now in the mornings, I try to read my fundamentals. Right before I go pick up my daughters, I try to read my fundamentals. And then right before I go to bed, I try to read my fundamentals. So that way I just am always in the flow. I'm always in the know. While at the same time, in between that, I'll layer in structuring content out to you guys, creating YouTube videos, having a structured time where I can do research, having a structured time where I know I like to invest during this time. So, like for example, as a dollar cost averager, I still use the CYPRX strategy. So, with that being said, I monitor price action during a specific time during Asia. Sometimes I'll set alarms during London session and I'll wake up to check price. Like last night, I was like, the market already dropped. Probably not going to see a short squeeze, but just in case, I messaged you guys last night, let you all know, hey, all of these levels in digital assets are discounted severely and have met our targets. Just be careful. I'm going to sleep. Set yourselves alarms in case we see a short squeeze, but the market's discounted right now. You go back and you look at the charts, and the vast majority of those targets that I gave you guys are all in profit right now. It might be a slight percentage point, but still, that's the power of dollar cost averaging. So having to migrate that whole entire avenue of approach investing into my new schedule, right? So it's just the hardships in trading that you experience as a beginner don't change when you become a profitable trader. They more or less just become more easily adaptable. Like you can handle situations different because you've matured in not only your life, but also in your trading life. And you can kind of merge the two together in such a way that if you saw me, whenever you see me, whenever you speak to me, you will never know that I'm going through something. You will never know that I'm sucking maybe internally because my outside energy will always be shining. It'll always be positive. It'll always be up, you know? And so I guess what I'm trying to say to you guys is always have that mentality, always have that ability, that adaptability to change and migrate to any situation. I know that we're human beings and sometimes you experience those days where you're like, this day sucks. But know that anytime that it rains, my grandfather used to say this to me because I used to be the type of kid that used to be afraid of thunderstorms. He used to take me out to the front porch and he used to say, hey, just remember that whenever it rains, usually the next day or the day after, the sun comes out. So it's something to look forward to. And it taught me that even on a rainy day, and even though it may seem bad now, if you have a forward projecting mentality and you know that the sun's going to come out the next day or the day after, that eventually the sun will come out, um, then you can look forward to that mentally and you can get through that rainy day, I guess, to put it in a fucking nutshell.